Vlaar and I'm from LendingLoop. So we connect investors from across the country with small businesses looking for financing. So small businesses that are looking to hire employees or purchase equipment, instead of going a bank, they can come onto our website and have investors from across the country pledge money to their loan.
What are some of the advantages of small businesses doing it this way?
We operate in a much faster manner than a traditional financial institution like a bank or credit union. So businesses can come on our platform and get funded within 3 hours. So from actually getting the money in their account, it just takes a few business days. Speed is the first. The second is flexibility. A lot of the times the banks won't lend to these businesses because they don't have the proper collateral or anything like that. We will actually lend to them with lesser collateral and less stringent requirements because we look at the whole business and the business owner holistically.
How do you ensure that you continue to protect your business throughout this process as well?
Yeah, it's an interesting question. We're aligned with our lenders, right? We want to make sure all the people that invest money through our platform earn a return and don't lose money. So we really promote the idea of diversification. So we want our lenders on our platform to lend to as many businesses as possible, because in the event of a default, which will occur, that will have a very small impact on their overall portfolio, which will allow them to continue to earn a positive return.
How big of a problem do you think it is in terms of those small businesses who do need those loans?
Yeah, it's a very big problem. I personally come from a family of small business owners, and I grew up hearing about the frustrations of accessing capital to hire and grow your business. We firmly believe that Canada's leaving money on the table with good businesses that should have access to this type of financing. When you look at the numbers, $74 billion a year are lent to small businesses for financing, and 20% of them are actually rejected from a traditional financial institution. So this is in the billions of dollars in terms of market size, and we're confident our technology will allow us to capture a lot of that.
What do you think is broken in terms of the big financial institutions and why they aren't able to move more quickly and more efficiently?
Yeah, I think the biggest thing is overhead in their cost structure. So they continue to build branches, they continue to hire staff, they're investing in the wrong technologies, which is basically making it impossible for them to lend money profitably to a small business that just needs $100,000 to buy a new oven for their bakery, right? So they're saying no to that client. That client's a creditworthy client and they need an option to go to besides a private lender, which will charge exorbitant interest rates. So that's why we exist.
When we're talking about the future of Canadian business, do you believe that it is small businesses?
I do believe it's small business. I think maybe it's not small business in the sense of having a retail location, but I do think there's an opportunity for a lot of Canadian entrepreneurs to build niche businesses and sell directly over e-commerce and things like that, right? You see a lot of hyper niche products coming online, and Canadians have the largest economy down south towards us, and I think they can take advantage of that market and build small niches that make very good businesses for the individual.
Well, I'm not saying that the banks and some of the fintech startups can't work together. It does strike me that the fintech startups are moving much more quickly. But in terms of your specific business, is it something where you long-term would want to partner with a big financial institution, or do you think you can go it alone?
I think there's an opportunity for us to work with a large bank or a financial institution. The thing is our model fundamentally displaces them from the equation. How we look at it is we enable people to become their own bank. Instead of having people lend money to businesses, we're letting you do it on your own. And from that standpoint, banks are quite nervous about what we're doing because they want to remain in that picture. They want to capture that spread between what they pay us on our interest and what they charge to a borrower.